You have stops there. You have people that will jump on board at those levels. Think about how many people jumped on board on Bitcoin when it pierced 30,000 thinking it was a breakout. Yet ultimately it dumped out, took a lot of them out. Now it's retracing back up to that level.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
There's a ton to go over. We have crypto ripping. We have the banking stocks pummeled. As of yesterday, FRC dropped 50%, which again is a regional bank. After basically, I'll tell you exactly why they dropped 50%. Bottom line is that's helping crypto catch a bid. We're going to talk about earnings announcements. We have durable goods orders out there. So there's lots going on here. And all right, so let's get right into the chart. Let's take a look at what's going on in Bitcoin here, guys. All right, so Bitcoin is ripping to the upside, just hit resistance at 30,000. Now remember, 30,000 to 30,500 is your key level of resistance. You can see what's gone on. Basically, since yesterday, when FRC, all right, First Republic Bank, when they basically had their earnings announcement, they came out and said that, hey, guys, we lost 40% of our deposits in the last quarter. In addition, we saw essentially our business stagnate. All right, that was not what Wall Street wanted to hear. 40% is a bigger number than Wall Street expected. And then to add on even insult to injury. All right, this is the kicker, guys. First Republic, FRC, they basically did not take any questions from analysts in the conference call, and they just said, done. And they walked away 12 minutes after they started that earnings call. All right, to me, all right, now remember, JP Morgan, Wells Fargo, all these big banks gave them $30 billion to shore them up. All right, this was a couple months ago when the banking crisis occurred. And for them to just say, hey, we're not even going to take any questions, that is not that's not uplifting to the sector. And so that stock got pummeled yesterday. And as soon as you saw it down 40, 50%, Bitcoin began to uptick. And it started to go better and better and better. Now, the bottom line is, as an investor, this is all inside of the levels. If we look at the chart on the daily chart here, let's go to the daily. So what we could see here is this is your 30,500 level. That is essentially your line in the sand. Like I just said, 30,000 to 30,500, that's what you're keeping your eye on. If we get above 30,500 and we close, you want a daily close, and then you want multiple days, I say 5 to 7 days above that 30,500 level. Now you have a confirmed breakout and you likely could head higher. Aside from that, be very skeptical of this move, because if the banking crisis does not get worse, this resistance at 30,500 to 30,000, that could ultimately end up being a top, and we still could see Bitcoin moving back to the downside. In fact, just to give you a heads up, I picked up a little bitty. If you've been following my Twitter, all right, you remember that last time we hit 30,000 to 30,500, I bought BITI, which is a short ETF. When you buy it, you go short the Bitcoin futures. I covered that for a nice gain, obviously, or I sold it for a nice gain when Bitcoin pulled back. I've now re-entered that trade, and I'm seeing if we can't get a good pullback on Bitcoin off of this technical resistance at 30,000 to 30,500. Okay, so that's a little rundown of what's going on in the crypto markets. Okay, so let's go back into the charts here. Let's look at Ethereum. What do we have on Ethereum? Ethereum is rallying, but look at the chart here. Look at where we're hitting. We're hitting resistance on Ethereum here. This upsloping trend line, a beautiful upsloping trend line. This is the key point. Now, one of the things I want to mention here, look at how Ethereum is not at the recent highs like Bitcoin is. What does that tell us? It tells us that Bitcoin is your pure play when the banking crisis is going on. Sure, you're seeing a bid in Ethereum, but it's not the same magnitude that you're seeing in Bitcoin, because Bitcoin is a pure play. Always remember that in 10 years, 20 years with Bitcoin, it's the pure play, just like gold is the pure play. If I had to put it in comparison, I would say Bitcoin is to gold as Ethereum is to silver. All right, think about that. Think about how silver doesn't really go one for one with gold, because silver has an industrial side to it plus a store of safety. Gold is just a pure store of safety. So kind of a cool little concept to think about. Bitcoin equals gold. Ethereum is equal to silver when it comes to investing. All right, so watch this level around 1960 on Ethereum. That is going to be a very pivotal level here. Let's see if we get through that. All right, now we have to get into some other economic news and some earnings news. We got to bring up Microsoft, guys. Microsoft coming out yesterday, beating earnings across the board. In their conference call, they said guidance basically was going to be very strong going forward. The stock is ripping. Now, this is interesting because even though it's ripping, look at where this line is, where it's showing. Right now, we're trading at 297. There's a key gap fill at 297 here. So that is resistance. So there is resistance at 297. If it breaks through 300, you could go as high as 311. 311 is another major pivot. When I see gaps on mega caps, trillion-dollar companies like this, what do? I start looking for a short opportunity because number one, that's a huge move for a trillion-dollar company to make, almost 10% to the upside. So look for that, folks. Again, I'm starting to eye potentially the short side of this right here, 297 to 300, maybe a pierce of 300 at the open today. Look for a short on that. That would be a slow accumulation. Leave yourself room. If we get up to 311, add to that position. I think those are your two key adds. I think ultimately you will see this pull back. I'm still in the camp on a macro basis, by the way, that we still see a recession in the second half. You're seeing economic news continue to weaken. The jobs number continue to weaken. All this stuff is continuing to show us likely recession. By the way, the Federal Reserve actually told us a mild recession in the second half. Like I've said in so many interviews since I said this the first time, if they're saying mild and they said transitory, and look at what we got. All right, they said transitory inflation, we got horrible inflation. They say mild recession, it's probably going to be a little bit worse than mild recession. By the way, one more little tidbit, the Fed will be announcing a rate decision next week on Wednesday. The expectation is a 25 basis point hike in interest rates. So they're still hiking here, guys. They're still tightening the noose, if you will, around the economy. All right, so we covered Microsoft. The only economic data of interest today was durable goods. Durable goods did hike better than or jump better than expected. However, if you take out automotive, if you take out transportation, it was only up a little bit. So it's not a huge deal. But again, it was better than a weak number for sure. Now, Google reported earnings, also decent earnings. But look at this. The stock's barely up. Yesterday in the after hours, the stock was up much, much higher, above 108. It is now barely positive. So earnings for Google were mediocre. They were pretty good. But the biggest kicker here is they announced a $70 billion stock buyback. Folks, that is a massive amount of shares they're going to be buying back. All right, it's essentially a buyback for those of you in crypto is essentially like burning a token, right? If you're burning some of the token, you're getting rid of it. You're taking it out of the float, essentially. So just keep that in mind. That's a huge buyback that will give a low-end support level, but I'm still ultimately bearish on Google in terms of what they're doing right now. They seem to be a step behind in AI. They seem to be a step behind in advertising based on the slowdown. So look for that to come in over the next multiple weeks to months. As of last night, when the tech earnings reported, the earnings that came out, whether it was Visa, Boeing this morning, or Microsoft or Google, much better than expected. It came on the back of a very sharp sell-off in the equity markets, which again basically put us in a position where we were expecting the worst case yesterday. Now, if we had gotten bad earnings, we'd probably be down a massive amount today, considering the bank stocks getting crushed and then bad earnings. We didn't. Those earnings came out better than expected. It is buoying the markets today. If we go to the SPY, all right, here's the SPY chart, and I have a lot of little trend lines on this chart from day trading. But bottom line is, what we can clearly see here is that we are gapping up on the spiders. But this is what's interesting to me, right, is that even with all this good news on earnings, look at the spiders. We're only getting back. This is where we closed yesterday, right here, and this is where we are today. You're only up about $1 on the SPY. What does this mean to me? It means to me overall, this market is looking for reasons to sell off in the equity side. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. All right, even though you're seeing a little bit of a bounce here, a lot of that bounce in crypto is a relation to the banking crisis and the safety trade, right? We see the Bitcoin leading the charge. But bottom line is, you're not getting a very oversized move in the QQQ, and that to me would be concerning going over your next couple weeks of trading, especially ahead of the Fed next week, where the Fed is likely going to stay relatively hawkish and hike by 25 basis points. By the way, look at what Ethereum did. Ethereum pierced 2,000 recently, right? It took out that previous high, barely, and then sold off. There's a tendency in markets, and this is psychologically based in human nature, for us to hit key levels and pierce them. All right, you have stops there. You have people that will jump on board at those levels. Think about how many people jumped on board on Bitcoin when it pierced 30,000 thinking it was a breakout. Yet ultimately it dumped out, took a lot of them out. Now it's retracing back up to that level.